Where do you think the earnings will be able to beat? Which sectors are still looking like they could have the greatest upside from here, Winnie, so that investors can keep on riding the wave?
Yeah. I think, for the short term, it looks like some of the reopening consumer themes could actually see upside surprises for first half of the year. Because previously, even when China initially reopened in November, December, many people would imagine that, first quarter, first 3-4 months will still be chaotic and the consumer activities wouldn't rebound that fast. So generally, people expected a weak first quarter and slow rebound in second quarter. But the way China is progressing toward a reopening is actually much faster than even us, right? We were bullish ones on China reopening. So, given the very rapid pace of infection and potentially peak of the infection waves, we might see in first half of this year, many consumption reopening related themes see better than expected earnings growth. That include, the consumer sectors like restaurants, hotels, beers, some sportswear names. That include potentially Macau gaming, that include the transportation related names, and also healthcare related sectors.
Winnie, would you say the strategy then for investors at this point would be a long-term one? Just buy an ETF or buy a basket of currencies and hope that the cyclical upturn lifts all boats? Or are you seeing still perhaps enough uncertainty in the short term to merit perhaps a more specific stock picking strategy going forward?
Yeah. I understand that many long-term investors, especially, some long-only investors, they wouldn't feel comfortable to buy China companies because they were unable to visit these companies in the past 3 years. So that's actually one of the key things kept the global long-only or some of the EM long-only underweight on China. And we know they try to play the China story maybe through commodities, through, the copper names or through other themes. But we do think that as China continues to reopen, investors are able to visit the companies, they will be able to find more bottom-up good sectors with secular growth. Whereas purely on ETF and index, we do think that the multiple rating trend will continue, the mean reversion trend will continue probably for a few more months. But from longer-term perspective, I still worry that HSCI, MSCI China is too much dominated by the large-cap internet names, which we worry have a long-term structural derating trend. So short-term, agree, large-cap internet high beta for multiple expansion. But beyond that, I do advise investors to look for the next big thing, the areas where there's secular growth.